we're going to dive into gold and silver, but not just in the short term in terms of the forecast, but looking at the bigger time frames. We're going to go to the logarithmic chart. I want to show you how I was able to call the major top on gold before this big retrace. And ultimately, we'll talk about where gold is going over the next few years, which even though I think we're going short term lower, longer term, we're going way, way higher. So let's dive into the charts. We're going to start in the short term. I always like to start kind of on the micro view, looking closer up and then expand out. Let's start right here on the daily gold chart. Now, what we see here is gold obviously had this beautiful top right here.
Gareth Soloway explains that by studying gold charts closely, especially using patterns like the Doji candle, you can spot major turning points in the market. In simple terms, when gold kept rising for several days and then formed a doji, a candle showing equal strength between buyers and sellers, it signaled that the upward momentum was weakening. This shift led to a price drop, and now the chart shows a pattern of lower highs and lower lows, which suggests gold may continue falling in the short term, possibly even toward the $3,500 level, before rising again in the long run. Gareth Soloway is a well-known technical trader and market analyst who focuses on chart patterns and price behavior to predict market movements. He has taught millions of investors his strategies and often emphasizes using tools like logarithmic charts to understand long-term trends. His overall view is that while gold may drop in the near term due to too much speculation, he remains strongly bullish for the future because of global debt and weakening fiat currencies, which historically support higher gold prices over time. Before getting started, make sure to subscribe and enable notifications so you don't miss any updates. If you find the content helpful, hit the like button and feel free to share your thoughts in the comments.
Right? You can see this is what we call a doji candle, where gold had 1, 2, 3, 4, 5, 6, 7 candles to the upside, all green. Notice that on the daily chart. That's called a time count in the methodology that I have taught to millions of investors out there in the world. Now, what we got here is after the 7th candle, you got a doji. That tells you there's a reversal signal at play here. So number one, dojis form when you have momentum to the upside, momentum to the downside, and price ends right in the middle, right? So right in that middle point, you can see how the red portion is pretty tiny with a long wick on top and a long tail on the bottom. Now, what that means, folks, is it means this was a culmination of equal amount of buyers and sellers. So in the previous 7 days, buyers had full control. They were pushing the market up, pushing. The sellers, they had no chance. It was green, 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 green. What you get on that last candle, which is the doji, is all of a sudden sellers emerge and they equal out the buyers. And it swings wildly both ways. But when all is said and done, the battle on that last candle was a stalemate. And that's a change in character because of what we saw there on the previous 7 candles where the bulls were in charge. Now it's neither the bulls and the bears are in charge. It's equal. And that tells you something is shifting. And lo and behold, after that candle, we saw the massive down move. We came down to this 4,400 area. Then we got the biggest bear flag here, almost retracing to the highs. Notice high, lower high. So that's a bearish signal. And then we came down and we made a lower low, low, lower low. Okay, so you see how the chart is guiding us, right? And so now we still held the 4,400, but we still made a lower low. That tells me in the near term that, again, while we could bounce up a little bit more, we could easily get as high as 4,800, maybe 5,000 again. We're likely going to head lower on gold and continue down. Ultimately, you guys know my bigger long-term, or midterm, I should say, thesis, which is an eventual move down to about this 3,500 level. Look at all this major support here. Now, I've told you before, this is where I start buying pretty aggressively. Okay, now I'll swing trade gold all up in this range. Anywhere up here, I might go long, I might go short, depending on the short-term signals on the micro chart. But on the longer term, this is where I want to buy because my longer-term thesis remains exceptionally bullish, right? And again, why am I bullish long-term? Well, near-term, I'm bearish because, number one, gold is acting like a risk asset, and it's not a risk asset. At least it hasn't been for hundreds of years, if not thousands of years, right? And so all of a sudden, we can't say, oh, well, you know, in the last 6 months, gold all of a sudden has become a risk asset. So, yay, it's going to be a risk asset for the next 500 years. No, it's not going to be like that. And so When it becomes a risk asset, it tells you there's too much speculative money in there, and that has to be washed out. Therefore, with the bearish lower lows and lower highs, we favor the chart saying downside, and the thought process of it needs to wipe out the weak hands has to come into play as well. So that brings us into that 3,500 level. The reason why I'm bullish longer term on gold is because you have consistent higher debt in the U.S. and globally of fiat currencies, right? The degradation of fiat currencies, the U.S. dollar, etc. I mean, every lesson that got people excited about gold over the last couple of years, that's a true factor. That's a true thesis. And I believe in that thesis. It's just you got to wipe out the weak hands first. You got to get them to kind of say, uh-oh, this wasn't as easy as I thought. And they get out, and then it returns to that kind of longer term thesis of the anti-fiat kind of protection risk off asset. Now, like I said, I want to go to the bigger time frame. We're going to flip to a different gold chart so I can keep my lines on the charts here. And let's go to, let's see here on gold. We'll go to, let's see, we'll go to the Forex, which one? It doesn't really matter here ultimately. I just want to have a different gold chart. We can go to this one. Let me just see if this one goes back far enough. This one does not. So we'll have to go to, we'll go to this one here. Let's see. Nope, that one doesn't go back far enough either. And we'll go to, let's see here. We need one that goes all the way back to the 7. Yeah, you know what? We'll just use the one we were using, and I can erase those lines. Not a big deal here. All right. So let's get rid of them here. And we're going to look at this chart on a monthly basis, and we're going to scroll all the way back to 1979, 1980. What I'm going to do is I'm going to flip to the logarithmic. Now, a lot of people ask me when I use logarithmic charts. I use logarithmic charts, number one, after I've looked at the linear chart, the normal chart. I always look at the linear chart first. And then when I'm going back really long, like literally in this case, you know, back to the 1980 high pivot, which is 45 years ago, I'm going to go to the logarithmic chart to just see what mysteries can I unfold here. Because every little bit of nuanced information may give me an advantage. Now, if we look at this chart and we start to say, wow, all right, so let's just start connecting some lines here. What if we were to bring a trend line here and we do a parallel from that low and we drag it up? Look at what happened.
Gareth Soloway explains that by using long-term logarithmic charts and parallel trend lines, he was able to identify when gold was reaching a major top even when most people were extremely bullish. In simple words, he connects important past price points, lows and highs, and draws parallel lines to see where price might react again. These lines showed that gold was hitting a strong resistance zone, meaning it was likely to reverse instead of continuing straight up. He also uses the same method on markets like the S&P 500 and Bitcoin to predict tops and major moves, proving that charts often repeat patterns across different assets. In the bigger picture, Gareth Soloway believes gold may first drop toward around $3,500 because that level matches strong technical support from these trend lines. But after this correction, he expects a powerful bull run. By extending those same logarithmic trend lines into the future, he projects that gold could potentially reach around $10,000 by 2030. His main idea is simple: short-term weakness is needed to remove excessive speculation, but long-term trends still strongly favor much higher gold prices.
I mean, this is amazing, folks. So literally when I was getting bearish on gold because it was going parabolic and so many people were bullish, look at what you have. You have your low pivot to your low pivot here, right through this low. You bring it to your high here in 1979, 1980, and we literally have a hit up here. Now, remember, I've used this same sort of parallel. If we flip over to the regular chart of the S&P, what have I used it? I've used it to predict this recent down move in the S&P, and you can see it right here, right? Low pivot to this point here. So these lows, we connect them, and the parallel line goes to the bull market of 2021, the bear market here, and the bull market up here. I mean, remarkable. All right. You could also see this in other charts as well. Trend lines going back this far, for instance, not a parallel necessarily, but if you go to Bitcoin, this told me Bitcoin was topping in 2025 as well. The high pivot from the bull market of 2017 to the high pivot here in 2021. And look, when everyone else was bullish last year, this told me Bitcoin was topping. So these type of things are unbelievably important. Now let's flip back to the logarithmic chart, and it goes and gives us this beautiful, let's go back to the monthly chart, this beautiful parallel here. Now, the other thing that's interesting that also told me there was, I mean, listen, one factor is fantastic, especially when it's a long-term parallel like this, but two factors are even better. All right, now, right now we're talking about how I was able to talk about the top. Then we'll go into projections. So here, look at this as well, okay? You basically have this low connected right through that high, cuts right here. You had the blow off top reversal right here, and we get up right here. So this really, again, did I know exactly where gold was going to top? Was it going to be 5,600 Pierce? You could have gone a little higher, but the point is, look at how close those lines were. Major logarithmic trend lines connecting through here. And that, again, was telling us that while everyone was emotionally triggered to think that gold was going to go up forever and it was going to go to 10,000 in a year, whatever, it was the chart was saying, no, 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 no. It's not that easy. And also, it became a speculative asset, and that's never a good thing for gold. All right, now, let's talk about upside potential. So using that same format, what if we, again, let's talk about parallels. So number one, we connect this low here, right? And that was kind of what we had done already, right? So that gives us that first top. But what if we connect this low through these lows and we use that same sort of format? So look at how these align perfectly on the logarithmic chart, okay? So here's a trend line. We take the low from 2001, basically 25 years ago. We connect it, and look at how on the logarithmic chart, it matches perfectly with the low of 2018, the low here in 2022, and the low in 2023. Now, what if we extend that parallel up? Well, first of all, look at this. So, I mean, this is, by the way, this is the stuff that freaking excites me so ridiculously. But look at this here. Look at right here. So what you're doing is you're looking to see, does the logarithmic and the new trend line have teeth? In other words, does it make sense? And look at that. Look at how it behaves as support, 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 and support, then resistance, 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 breakout. Now, what did I just tell you guys about my downside target in the near term on gold? Where did I say it was going to, my thesis is going to go? And you should all know 3,500, right? I mean, no hiding there. All right, so if we look at this, we can see, where is this trend line? If it were to retrace right there, look at that. What's that at? 3,500 right there. So that, number one, means that not only is that major technical support from here, but it also has a secondary factor there. Now, let's use this and extrapolate out. What if in the next bull cycle, we go up to this high here? Okay, so the bull market high on the logarithmic chart from 2011. By the way, I'm not going to have time to do silver today. Taking, this is too much to go into, but that's okay. I'll do silver individually just like this in another video. But now, let's just say in 2029 or 2030, our next bull run concludes. So let's say 3 years from now or so. Guess where your target is? Right up here. In 2030, what's your target? 10,000 right there, guys. See that? Okay. Now, anywhere, depending on how, so basically the idea is we come back to about 3,500, right? And that's that level in there. Then, who knows how it goes, but there you go. 10,000 on the logarithmic chart. Pretty incredible stuff, isn't it? I love this stuff, guys. This is why I love charts, is because you can discover, it's like a mystery.
Gareth Soloway shows that by using logarithmic charts and parallel trend lines, he identified a major top in gold even when most investors were overly bullish. He believes gold may drop toward $3,500 due to technical support and the need to remove speculative buyers before the next move. In the long term, these same chart patterns suggest a strong bull run, with gold potentially reaching around $10,000 by 2030. Do you think gold will drop first before hitting $10,000, or continue rising from current levels? If you enjoy the content, please like this video, subscribe to the channel, and press the bell icon for timely updates. Furthermore, share your thoughts in the comments section. We appreciate your support, and we thank you for being with us. Wait for the next updates. Thank you.